It's Monday, May 10th. This is The Street Live. I'm Katherine Ross, and I am joined by Jim Cramer. Jim, what are you watching in the markets? We do have the Dow pushing up and the S&P and NASDAQ pushing lower, which seems to be a normal day.
Yeah, I mean, Carl Quintanilla just posted on Twitter, and it's something from Chris Hayes that says that 34% of the S&P was posting fresh 52-week highs at the open today, and it's a very large number of new highs. Now, I think the adverse is true too. The obverse says that NASDAQ is headed to 52-week lows. Now, many of the NASDAQ stocks are up so much, even after the decline today. But it is noticeable that if you're in a NASDAQ stock, or of course in a tech stock, that happens to be listed on the New York Stock Exchange, you're being crushed. And to not focus on it is to avoid the crash that's occurring. And there's no way that you can own these stocks and not feel a tremendous amount of pain, but you made a lot of money. So maybe you can still take something off the table.
Jim, I want to take this opportunity to talk about Elon Musk's appearance on SNL and the Dogecoin effect. Musk did call crypto a hustle during a segment on the coin, and we saw it start to drop. So what's your takeaway from Musk's appearance?
Well, I mean, it's a show. And Lauren Michaels, who used to be a partner of mine, is a terrific guy. Wants to have fun and makes the show great. If they're taking Dogecoin at Tesla, then he may call it, a farce, whatever he wants to call it. But the fact is that a hustle, that many things are hustles. And, it's also just it's a TV show. That's all it is. It's a TV show.
So moving on to other topics that are actually impacting the market, Jim, I do want to talk about the Colonial Pipeline, which is the U.S.'s largest fuel pipeline. This did fall prey to a cybersecurity attack late last week, and there hasn't been so far a restart date announced for the pipeline. So you listed some of your favorite stocks on Twitter following this news. So let's talk about your concerns and why you like stocks such as Enterprise Products, Kinder Morgan, Chevron, and Pioneer.
Well, I mean, I think that all these companies get to take prices up, regardless of what's really happening. I mean, it's a good excuse to move things up. I mean, Chevron, they can nationwide raise the price of oil, gasoline. Maybe they get hurt in the Northeast, but maybe it's a great excuse to jack prices up. And this has happened time and time again. I'm not just Chevron and Conoco. I mean, everybody, Exxon, this is a time-honored process, which is that when there's some event that makes them have to pay more, they pass it on to you. And maybe they have to ship the gasoline from one place to another. They have to provide the gasoline, so they're not going to do well in the Northeast. They got to make it up somewhere. And Enterprise Product Partners is a mass limited partnership. And if you think that Biden is going to get rid of the tax advantage of Enterprise Products, then it may not be the best. KMI, on the other hand, is a C Corp, so it's not subject to the taxation, and that stock is up very big again. It's at 5.9%. It's a very good company now. It's a lot better than it used to be, and it's on fire. So, I mean, there's just a lot of ways. I've been very exclusive in the energy patch because I don't like it, but I picked the fastest grower, Pioneer, and the best dividend, Chevron. And those are the ones that I'm recommending. And then these MLPs are very, very attractive now, provided, again, that we don't get a change in tax status.
And interestingly enough, Jim, your stocks to watch that you tweeted about a couple hours ago were Freeport and Nucor, based on the infrastructure bill, which ties into what we've been talking about. So how do you go about picking infrastructure stocks, Jim?
Well, I mean, Freeport's actually turning here. I was looking at these ridiculous ETFs that were created in order to be able to cash in. They always create these to cash in, and then people just start losing furious amounts of money. But you need steel to do any of the things that are involved with infrastructure. And Nucor is the country's largest steel company, so they benefit. I had them on. They told me that. Had them on, made money. Nucor, we owned Nucor for a while. We made money. Would I buy it at 102? No, because I think it's up on a spike. And I don't like to buy stocks that are up on a spike. I like to sell stocks that are up on a spike. My only problem here is that I don't want to sell so much of the stocks that we do own that we end up with not a lot of stock. But we are making some trims today. You can sign up I know that many people get this free video, but the club does things. We have a club meeting this Thursday, and I'll talk about how to set up an outlook. But we have to make some moves. Some of the stocks we own are just up too much. And I know that sounds odd, but they're just up too much versus expectations. And I feel it's important to be able to take some off the table.
As Jim just said, you can tune in to his monthly call on Thursday at 11:30 a.m. And you can also tune into our daily rundown show right after this over on actionalertsplus.com. Jim, we're going to be talking about those trims specifically on AAP. So before we get there, I do want to ask you about your real money column, where you said that there are too many defenseless stocks in an environment where inflation is still a key story.
Yeah, I mean, people don't want to pay up when inflation's raging. You don't play. Historically, you do not buy stocks that are price to sales. And this can be a feature tonight on Bad Money, is talking about price to sales versus price to earnings. And by the way, the NASDAQ stocks that were downgraded today by Jason Bassinet at Citi are not expensive. And he's made up this thing says that advertising's peaking there. That's not true. But people are in a race to downgrade these stocks. I think you'll see a series of semiconductor downgrades now, because people want to be able to say, listen, I recommend the Skyworks at 90 and it's now 160, whatever. And that's historically what happens. They wait and they wait and they wait, and then they say, listen, I can't take this anymore. I mean, Skyworks is at 204. Now it's down to 166. But Skyworks is now only 16 times earnings. So, is there a price that you want to buy Skyworks? I think so. But I recognize that you're going to have to take a lot of pain. Not as much pain as you have to take on a wood stock.
Jim, when you talk about defenseless stocks in this interest rate environment, for those who may not understand where you're coming from, we talked about you talked about SPACs in this column, but how do you spot a defenseless stock? What's the key here?
Well, it's price to sales instead of price to earnings. It's SPAC, the insider selling of SPACs, the insider selling of everything. And but mostly my focus is on no dividend, no buyback, no price to earnings, because there's no earnings. And these are the stocks that are for sale. And you take a stock like Coca-Cola. Okay, Coca-Cola had a fine quarter, not a great quarter, but it yields 3. What does it yield? Coca-Cola is very typical of what's going on. It yields 3%. It's hitting its 52-week high. It sells at 25 times earnings, but it's 25 times earnings, not 25 times sales or 10 times sales. And so that has gravitas. PepsiCo. These are not inexpensive stocks. Okay, PepsiCo sells at 26 times earnings. That is not inexpensive. At the same time, it's what people want. I find it interesting that these companies are so expensive versus historical, and no one seems to mind at all.
So let's talk about a stock that's working in this market, which is ALCOA, and it was your stop trading because, as you noted and I just said, it's working. I mean, what do you want younger investors to know about stocks such as ALCOA, and why should they be investing in some of these?
Well, they don't know these stocks. They just don't know them. And they are, I think, look, Robinhood was the most downloaded app last week in the App Store. I think that the people who are in Robinhood now are buying Dogecoin. For a half hour on Saturday night, Robinhood crashed off the Dogecoin. I think they're buying typically Ethereum. They're buying Ethereum very heavily. They're already in a lot of the NASDAQ stocks that I'm talking about. They were preferred. It's what people bought. They didn't care about like a DuPont or an ALCOA, and I'm going back and forth with Jeff, and I just think that we bought a lot of these for Action Alert. We bought a lot of the name brands for Action Alert. We kept some semis, and we're up huge on the semis. So if you take a look at NVIDIA, we're up gigantically in NVIDIA. If we wanted to sell it, we make like 300 points, and maybe we should sell some because I think it's going down, but I also think that it's entirely possible that you might be in a situation where some of those stocks start bottoming just because they're under such distress, and others no. I think that the hardware stocks have a better chance of stopping than the software stocks, because the software stocks are so expensive still, even if after they've come down. They are very, very expensive.
Talking about a retailer that we've discussed plenty of times on this program, and actually the last time that we talked about it, Jim, you were talking about, and I'm discussing Walmart here. We talked about it last in the face of Amazon and how Walmart, you said, was losing out a little bit. But we now have a Morgan Stanley survey saying that Walmart Plus is coming back a little bit. So explain why you still like Walmart and why these people on Twitter who are taking your opinions as one versus the other shouldn't, since you guys own both Walmart and Amazon.
Well, they're very different.
Action Alert Plus.
Walmart is fantastic, brick and mortar, that's using its stores as distribution centers. Amazon has other distribution centers and both are trying to do same day. To think that e-commerce, if you have a company that's involved with e-commerce and another company with e-commerce, that's not conflicting. I mean, there's Costco's e-commerce, Best Buy e-commerce, Lowe's is e-commerce. Lowe's is up big. Lowe's and Home Depot were up big because it was just a huge weekend for them, I believe, planting. And I say that because, man, I do enough of it to know that it's very hard to find plants because gardening became such a popular thing. But with the exception of GameStop, all my retailers are up big. Now, GameStop is a very interesting stock because you mention it, or if I mention it, and there's just endless character assassinations when I mention it. So what do I do when that happens? I double down. I think that we need to see something from Ethan very soon. I mean, what is his name? Zimmer. What's his name? Ryan Cohen.
Ryan Cohen? Yeah,
we need to see something from Ryan Cohen very soon. I mean, I don't know what the plan is. I was thinking of a new plan for him, though. What he could do is he could bundle. He could do a subscription business because that's what he knows. He's from Chile. He could bundle an opportunity to have, say, Grand Theft Auto, Call of Duty. He picks like 5, okay? And he gets a really good deal from the video game companies, and he gives you a subscription. And you get, say, Red Dead Redemption, the new ones. And this is my, I'll probably have to write this up for Ryan. I always like to share things with the Wall Street Best people because they love me. And they'll talk about, Aaron Task in a video, and they won't run the whole video. They just run part of it. And they'll talk about Coinbase, whatever. And I will double down. See, because I have a TV show and they don't.
And Jim, I was trying to look this up when we were talking about, when you mentioned Ryan Cohen, I was trying to figure out, I believe that and GameStop has an investor day coming up in June. Correct me if I'm wrong, Twitter or Jim, if you know, but I do believe that we're going to hear from the board sooner or later. And so Jim, I want to talk about your Mad Money segment from Friday, because one of my favorite segments that you do, and Ben Stoto contributes to this, and so does the rest of the team, is your Know Your IPO segment on Mad Money. And you focused on the Honest Co. last Friday, and you noted that timing is part of the reason that you're not recommending this stock. So I'm wondering, when looking at IPOs in this current market, does timing have to be included in every investor's thought process before buying it?
Well, I mean, we compared Honest to other companies in its cohort, and it's just so expensive versus others that it's just kind of like, are you kidding me? I mean, but they brought it public because they said they were going to bring it public. I mean, one of the things that when you're a syndicate member and you say you're going to bring the Honest company public, well, you're not going to be stopped by the fact that the market has no appetite for your stuff at all. It just doesn't work like that. I mean, you just jam it through the throats of people. And you cut the price that the deal's done. You also make sure that that people who have done really well on other deals, you say, hey, listen, man, you got to help us out here. Now, once again, because of the Wall Street Best people, I do not do this. I am not allowed to own these stocks. I'm not allowed to own any stocks. But I think it's important to point out that that's what happens. And I'm defensive about it because every time I ever say, here's what happens, I am then said that I do it or that my hedge fund friends do it. And you know what? Again, I'm going to double down because that's all I know to do. I work harder than they do, and I always will. Up at 3:30 this morning, kicking butt, doing my work, because that's what I know to do. That's all I know to do. I'll work till 11 tonight. I'll be up at 3. Why? Because that's all I know to do. That's all I've ever done, and it's been like this for 40 years, and I am just getting started.
And you don't even take breaks on the weekend, although your work on the weekend might be a little bit more fun for you because you garden. Exactly, you garden, and you were tweeting about it this weekend. So I'm wondering what you're growing this year.
Okay, so this weekend, I planted 3 rows of tomatoes, and I did 1 row very closely together at the behest of my wife, and then I did the other ones 18 inches apart. I just felt like I can't keep the ones that are really close. They're not getting enough sun. I planted a row of peppers, only quarter of them hot, most of them bell, because these are the 2 things that go into my sauce. Next week, I hope to get the zucchini. Last year, the zucchinis were all rotten. And the year before that, now I've totally changed my dirt so that the zucchinis, I'm getting, I don't know. I mean, I'm going to grow some by seed and some from flats that I get at either Home Depot or Lowe's. My local ones were all out. All my the guys, the mom and pops, just out of everything. And then I'm going to try to figure out where to put the beans. I don't know, because my wife made me plant all this eggplant. I planted Japanese eggplant because it's hardier. But I just find that it's going to be a battle between my wife and me about what to do with the other couple boxes. And she insists of doing lettuce. I will not do lettuce. And I'm trying to figure out where I can do potatoes. But the fact is the potatoes they're not as prolific as you'd like. I got another garden spot that I'm working on that I think I can do some potatoes. I'm just going to put them. I don't even have ones with good eyes. So my problem is that my wife and I are at loggerheads on these next 2 boxes, and I don't know what to do. I maybe you flip a coin. I don't like to be at loggerheads with her. It's just, especially on Mother's Day.
I would definitely suggest the flipping the coin. And Jim, I just got the official alert that you guys did trim a drug stock position on Action Alerts Plus. So let's head on over there on actionalertsplus.com. Come join us. We're going to discuss why the team decided to do this on Monday morning. I'm Katherine Ross, and we'll see you tomorrow.